Assalamualaikum. My name is Muhammad Muzakir bin Anwar. I would like to present about background of business company Kaka Beauty Cosmetic. Kaka Beauty is a start operation on 2017. The owner is Miss Zulaika, 20 years old. She started a business after retired from being an agent another cosmetic. She used a 60,000 ringgit as a beginning to start a business. The company is located at number 19 Jalan Plamban S7 through S section 40,000 Shah Alam, Selangor. She started business by selling basic makeup set only and expand a business at e-platform after gain a profit from selling their product. The e-platform that she used, which is Lazada and Shopee, she deliver her makeup set for makeup artists, which is a MOA, and the operation for the company start 10 a.m. until 10 p.m. every day and close on the public holiday. The cost, which is separate into three, which is capital, wages, and profit. And the cosmetic get a stock from supplier is from supplier from Pemborong Cosmetic Golden Beauty. Okay, we go to business characteristic. Kaka Beauty is a sole proprietorship, which is the sole proprietorship is easily for established and easily for distinguish from other business enterprise. Usually works at the name of the company, and mostly company is not use enterprise, just name it business company like Kaka Beauty Cosmetic. Kaka Beauty Cosmetic registered from Suruhanjaya Syarikat Malaysia Act 1956 since 2017. Kaka Beauty the only owner by Ms. Zulaika, and Ms. Zulaika opening capital from bank loan and handled by Ms. Zulaika and get help from her employees. Kaka Beauty Cosmetic get tender from Academic Kecantikan Diana and Suha Makeover, and Kaka Beauty Cosmetic is a unlimited asset and liabilities, which is Ms. Zulaika liable for all the liabilities.
Hi, Assalamualaikum. My name is Nurul Syafiqah binti Shahrudin. I will present about classification of business item. Business item can be classified into asset, liability, drawing, capital, revenue and expenses. Asset. Asset can be defined as the things that are owned by a business. There are two types of asset. There is current asset and non-current asset. Current asset are the asset usually keep in business for less than 1 year. This is because this asset can easily convert into cash. For Kaka Beauty Cosmetic, current asset is their stock and account receivable. Non-current asset are the resources owned by a business and will keep in the business for more than 1 year. For Kaka Beauty Cosmetic, non-current asset is premise, vehicle, furniture, computer and cashier machine. Liability. Liability are the financial obligation of business or an amount of money owed to its creditor. Liability also can be classified as current liability and non-current liability. Current liability are the debt that can be paid within 1 year in short duration of time because it's small value. For Kaka Beauty Cosmetic, current liability is account payable, which is their current supplier, Pemborong Cosmetic Golden Beauty. Non-current liability are debt that cannot be paid within 1 year, need long period to pay due to huge value. For Kaka Beauty Cosmetic, non-current liability is loan that owner make to support the business. Drawing. The act of drawing cash or asset from the business by the owner for personal use is classified as drawing. Any type of drawing will reduce the capital. For Kaka Beauty Cosmetic, owner always took cash or product every month for personal matter. Capital. Capital can be defined as stock or ownership in a company. Capital might be cash that were held in a deposit account, machinery, storage building, and many more. For Kaka Beauty Cosmetic, their capital is 60,000 and also the vehicle for delivery product to customer. Revenue. Revenue represents the monetary value of certain goods and services that have been supplied to the customer. Revenue can be classified as operating revenue and non-operating revenue. Operating revenue are the revenue that earned from the main business activity. For Kaka Beauty Cosmetic, they receive operating revenue from its daily business transaction. Non-operating revenue are the revenue received from unrelated or different from main activity of the business. For Kaka Beauty Cosmetic, receive non-operating revenue from the asset were sold, such as oil printing machine. Expenses. Expenses is the cost required for something in return and used to generate the revenue. Expenses can be classified into operating expenses and non-operating expenses. Operating expenses are expenses which are directly involved in business every day. For Kaka Beauty Cosmetic, the operation expenses is worker salary, insurance, utility, and general expenses. Non-operating expenses are expenses which are not directly involved in daily business. For Kaka Beauty Cosmetic, their non-operating expenses is interest expenses and tax expenses.
Assalamualaikum warahmatullahi taala wabarakatuh. My name is Asfa Aizat bin Hizin. Today, I would like to present about the recording process of the business. Number one is source document. During an accounting or tax audit, source document backup the accounting journals and general ledger as an in dispute transaction trails. Source documents are invoice, bills, receipt, debit note, credit note, and vouchers. The owner of business must keep all the source documents for their expenses in their business. For example, the amount of the transaction, to whom the purpose and the date of transaction was made. The source document must be recorded in accounting journal after doing the transaction, because this document is important to owner of the business to make a double check in their transaction. Number two is book of prime entry and journal. Usually, the businesses will have a journal for accounting purposes. The process of recording transactions in the journal is known as journalizing. Journals can be classified into the general journal, process journal, sales journal, return in work, cash, payment, and receipt journal. Number three is ledgers. Ledger is a compilation of accounts maintained by a business. After transaction was recorded in journals, the total will be posted to ledgers. This process is known as posting. Ledgers can be classified into the general ledgers, sales of debtors ledgers, and purchases, or we call creditors ledgers. General ledgers show the nominal account where revenue and expenses are recorded. Number four is trial balance and adjustment. Trial balance summarizes information from the ledgers. Trial balance was prepared at the end of the month or when the end of accounting period. The trial balance listed in ending balance in each general ledger account by the owner of the business. The total of amount debit and credit in each accounting are supposed to match, because it will be recorded correctly in the books of account. If the debit and credit column of the trial balance are the same, It proves that the debit entries and credit entries will match. And the last one is financial statement. Financial statements were prepared by obtaining information from the list of balance in the trial balance. Financial statements are to provide information about the result of operation, financial position, and cash flow of an organization.
Assalamualaikum and hi, my name is Aini Nazira binti Nur Rasid and I will present about the strength and weakness of the recording process. The first one is help in taxation matters. In Malaysia, if your company make a lot of profit, your company need to pay a various tax like income tax. Total of the tax depend on the account maintained by your management for settlement of taxation matters. For example, Kaka Beauty Cosmetic need to pay for the taxes if our business gain more profit than amount assigned to pay tax. So we can know the right amount of the tax based on our accounting recording process. Second is decision making. When there is a proper recording process, it is easier for us to making a decision after knowing about accounting information of our business. We can plan for the future activities such as to open more branches to grow our business. The third one is a replacement of memory. Recording process help us to remember about our business financial details on our financial statement. It is difficult for us to remember everything about our business financials such as assets, expenses for the shop, profit and loss if there is no financial process recorded. And the last one for the strength, preparation of financial statement. First one is a recording process allow us to do a comparison the financial result of one year with another year easily. We can know the current year profit of our business and compare with the previous year. Also, we can analyze the systematic recording of all transactions according to the policies of the entity. The second one is a recording process. Make it easy to prepare a financial statement for our business. From the financial statement, we know that the total of business model, expenses such as utilities, rent and maintenance, and also our profit or loss statement. Meanwhile, the weakness of the recording process, number one is manipulation of account. Manipulation will be happening if the person who manage the account is untrustworthy and not responsible for their work. They might manipulate the account by cheating about the financial information. Second one is express accounting information in terms of money. In book of account, non-financial transaction cannot be given effect to the books. When they went to buy a type of makeup set and tools, we cannot put the list in the book of accounting. We only can put amount of the price list. The third one is provide insufficient information. By making a recording process, information may be not accurate. This is because there will be information that is overlooked by the accountant, and this will be causing the entire of the recording process will be affected. As example, there are excess spending in the expenses and the excess in actually a purchase of facial masks that are recorded. It may lead to insufficient information of financial statement. The last one is accounting recording deals with overall profitability. Account of business are made by a way which show only overall profitability. It does not show net profit per product or per department or according to job. Thus, to find it difficult to all activity which do not give profit. So it creates inefficiency in business activity.